Hello and welcome to the Mutual Fund Show. In this brand new avatar, I'm Shah on NDTV Profit, and it's the launch period for us. It's arguably the most important time in our life cycle, and who better for me to start off the Mutual Fund Show than somebody who's been who's arguably one of the most well-known faces in the mutual fund industry, most respected name, and somebody who's very dear to me because he's always done shows with me at the end of the year talking about the next year. We are doing just a few days before the year ends. The guest today is Nimesh Shah of ICICI Prudential. Mr. Shah, thanks so much for taking the time out and being on my inaugural mutual fund show.
I had to be the minute I was told that it is going to be the first show that you're going to do on NDTV Profit. So congratulations to NDTV Profit and congratulations to you personally. I am sure you'll make a difference on NDTV Profit.
Thank you so much. Thank you so much. Really appreciate it. I'm trying to understand if you think that 2024 will see all of us, financial market participants, make a difference relative to what's happened in 2023 or the past 2 or 3 years. How do you feel about 2024?
See, 2024 is going to be a special year, as we have a special year every 5 years, right? So it's going to be election year. So I've got zero expertise on what will happen on politically. So let us leave that incident away. But you cannot, as an investment person, I cannot wash away that, though I don't have expertise in that area, but in the short term, you cannot just say that it's not there. So it's going to be election year, and the way the election goes will have a great impact on what the returns that one can expect in 2024. But on the long term, obviously we all know that markets ultimately over a 3-year, 5-year paradigm will follow the earnings. So 2024 is a very interesting. So I'm keeping away the election part away because anyway we don't have any expertise on that. But overall we are in a very interesting phase as a country. We have never had, in the 3 decades of my career, I've never had such an interesting and a strong macro. Over the so many years, look at the rest of the world and look at the macros of the rest of the world and look at the macros of India. So we enter 2024 where the government macros, the government numbers are very strong. We enter 2024 with the Indian banks. There seems to be nothing going wrong with lending, right? Balance sheets have been cleaned up. Balance sheets are squeaky clean. Neither are new problems have surfaced till now. So balance sheets are pretty clean, right? They are able to take more and more risk and manage this risk well. So you've got a strong government, you've got strong banks, and you've got very strong corporates. Where have you seen this kind of scenario where the corporate leverage is very, very low? Corporates are yet to grow. As corporates have the capacity and their capacity utilizations are being fully done up, right? There is shortage of power in the country. Going forward, there are going to be power projects in the country. There is going to be a lot of capital investments in the country. As all that happens, as the capital goods industry picks up, bank credit will also pick up. So I'm saying we are in a very nice phase as far as the economy is concerned. There are absolutely no complaints. The world is looking weak. India is looking strong. India has managed its past macro wells. Corporates are strong. Banking is strong. Indians are not as leveraged. So things are doing well overall.
Okay, so corporate balance sheet has been delivered for a while and yet we haven't seen the corporate capex come up. Are you sensing that because capacity utilization levels are higher than what they've been in the last 3-4 years, that we might even see the return of corporate capex as well? Is that possible?
When you meet corporate bankers, when you meet people who deal with corporates, there are a lot of inquiries happening.
Okay.
Indian manufacturing, we are very bullish on Indian manufacturing.
Sure.
See, I'm not saying a great revolution or everything is getting revolutionized. I'm not on that.
Agreed.
I am on saying with whatever is happening in the geopolitical situation in the world, a lot of Indian manufacturers. See, Indian manufacturers have withstood China since 20 years, right? Despite China exporting deflation across the world, Indian manufacturers have survived that. Now, with the world looking at one more producer, right? And I'm not saying everybody is rushing into India, but ask any corporate who has got quality products. Are they getting more inquiries from outside? Whether it is textile, whether it is chemicals, every sector that you go, are there more inquiries than earlier from outside? The question is invariably yes. A lot of those inquiries are getting converted into orders and they will result into more capex. So we are very bullish on the capex cycle in the country that finally it is coming. And I'm not saying I'm not saying a revolution, but even if there are more orders, I'm saying a CAGR, right? I'm talking about a healthy high teens CAGR. Is that possible? Yes, it is possible. Even if you see the last 5 years, ultimately our markets are going to follow earning per share. Last 5 years, earning per share has grown 13%. Markets have given a return of 13%. Nifty has given a return of 13%. So ultimately, earnings, market is going to follow earnings. And earnings, if it is going to be very stock specific, because markets, I can't say overall about the markets are cheap, right? I cannot say that, right? So markets are neither very cheap, neither are they very expensive. So we are in an interesting phase.
Got it. One aspect about, and from a mutual fund investor's perspective, that they would have seen, at least, I mean, the recency bias, that mid cap and small caps as a basket have done really well. And I'm guessing those funds too have mirrored what the index has done. Even if some funds may have underperformed, largely the wealth creation has been very good. Now my question is, there is various data points which suggest that after a period of really strong outperformance of the mid caps and small caps versus the large caps, there is a reversion to mean and large caps will do well. Would you believe 2024 could be the year wherein large cap funds or funds with a large cap bias might do better than the funds with a mid cap and a small cap bias?
See, risk management teaches you one basic thing, that whatever has become expensive, don't buy that, right? Okay. Whatever is relatively cheaper, buy that. So yeah, mid caps, but one has to, now there are 3 parts of the market: large cap, mid cap, small cap, as the SEBI has defined it.
Right.
Mid cap is a very, very artificially created zone, where there are only 150 stocks which are defined as mid cap. Right, out of that, most of the mutual funds or most of the developed DIIs will be investing only in 70 to 80 stocks. So that part is genuinely overvalued, because all of us are investing in the same kind of stocks, and there are substantial amount of mid cap funds in the country, all are investing in the same stocks. So that part is genuinely overvalued. The next part, small cap. In a rising market, you know, there are lots of smart operators in the system. So there would be some pockets of overvaluation in various stocks, right? Having said that, if it is a stock picker's delight market, right? If you are able to identify, so there can be a bubble kind of situation in mid caps? I feel so, right? We can get into that situation in 2024, because it has made so much return in the past that all the money is coming into mid cap, small cap funds, right? A lot of money, a huge amount of flows are coming into mid cap, small cap. That itself, people are buying expensive stocks. So if nothing else, I would like to tell your people who are watching this channel right now, is that do not buy things which are obviously expensive. I'm not saying things are going to correct, but returns will be limited from there. So if mid caps and small caps have done very well in the past, from a risk management point of view, I would definitely invest in large caps, because from a risk return point of view, large caps looks much better than mid caps, small caps in the current market.
Okay. The other aspect is also that when you mention earnings, and then I'll move on to equities versus other options too in the next segment. But just one more question in this segment. A lot of sectors that have gotten created of late don't have too many large caps within them. I mean, the whole railways, the whole EMS space, and a few others. And earnings growth is very strong out there. So could it be possible that despite the headline numbers showing that SMIDs have done much better than the large caps, there will be a very strong runway for a lot of mid-sized pockets even in 2024?
Yeah, so that's why I said it is stock picker's delight. The 2024 in the small cap segment, I'm not talking about the mid cap. Mid cap, it is very expensive market, I won't touch it. In the small cap segment, our ability to identify those stocks, can I see a lot of companies? See, we run in our alternate space, we run PMS, Portfolio Management Scheme, and AIFs. In that, we do our pipe structures, right, which we essentially invest in small caps. We see a lot of businesses where we expect that over the next 4 years, the earning per share can double. Right? So and today in a lot of those companies, the P ratios are actually lower than in the past, despite they're doing well. So when there is a specific small cap portfolio that we have got, the companies have shown a very good profit growth. The ROEs are increasing. Still, we are getting them at a lower PE than what it was 3 years back. Why? Because the earning per share has gone up much more than the share price has gone up.
Sure.
So I am talking even after they're giving 30% return, the portfolio has given a return of 30% over the last, more than 30% over the last 3 years. But then I saw the earning per share has gone up by 38% of that portfolio. So I am buying, today it is cheaper than what the rate at which I bought it. So it is still a good hold because the ROE is only increasing. So there are companies where profit growth is happening, ROE is expanding, and still they are available at a low PE, and there is a reason for that. A lot of fund managers would not have come after 2007. When did these sectors last do well? These sectors did last well before 2007, right? So people who have become fund managers beyond 2007, they have to yet to identify how to invest in those sectors. So still the P's are less because the market has not taken a great fancy. So is there reasonable money to be made in those stocks? But one has to be careful with those stocks with a lot of potential. There are many other stories also flying around. So it is a stock picker's market.
Got it. Well, that's a lot of insight, and thank you for that, Mr. Shah. We'll slip into a very quick break. The key takeaway for me is that by definition or by just common sense, large caps could do much better in 2024 going ahead. So starting this month, if you are putting in money, look at that aspect. But it is not that the small cap funds or the smaller end of the market will be shunned away, because there are a clutch of pockets out there when chosen right could actually give you the bang for the buck. So keep that in mind. We'll be back with from a very short break and continue our conversation with Mr. Nimesh Shah. Back with the Mutual Fund Show on NDTV Profit, in conversation with Mr. Nimesh Shah of ICICI Pru. We were talking about what within the equity universe could do well and what are the reasons for the same and how he feels about 2024. Election verdict notwithstanding and political noise notwithstanding, he still seems to be constructive on the India story for 2024 and the time ahead. Now my question is, within that landscape, and we've established that equities still look good, ceteris paribus, what about other asset classes? Because with the recent changes, or not recent changes, but the latest changes that have happened on the debt funds, for a lot of people, debt funds are now not a very essential part of their portfolios. I would love to understand, you've been a big proponent in the past of hybrid funds, balanced advantage funds, so on and so forth, whatever nomenclature might be currently. In a year which has got so many uncertainties, but your optimism around equities staying intact, are hybrid funds a good option as well? Why or why not?
So since last so many years that I have been doing a call with you, doing a show with you, I have always been saying that hybrid funds is what Indian diaspora wants. I am very clear, Indian investor wants to invest in equity. At the same time, they can't digest volatility, right? So the only way, and now there is another thing that has happened because of which hybrid funds are a must. The changes in taxation on debt side. Right. Debt is fully taxable if you come in my debt funds. So the only way to invest in debt and not pay the full debt taxation is by investing in hybrid funds. My case becomes stronger than I would have done 8 shows with you every year. The 9th show is much more powerful because again the same multi-asset fund which I have been advocating since last 15 years. Right? It is called ICICI Prudential Multi-Asset Fund. Why do we say that? Because almost 65% of the money is in equities, 25% money is in debt, which you get the same taxation as the equity taxation, and 10% is in gold. We are very constructive on gold right now. So whether it is depending on, so we have got a variety of hybrid funds, and hybrid funds, depending on the aggression that you want to play in the market, depending on the equity that you want in the market, a balanced advantage fund will have right now 35 to 40% in equity. A multi-asset fund will have around 65% into equities. Right? So depending on that, investors should look at hybrid funds very, very seriously, because that's the way to invest. Because of the taxation in the debt fund, hybrid funds are the way to invest. It protects them from volatility because they don't like volatility, and it is a tax advantageous way of investing.
Got it. Just wondering, your multi-asset fund now has had a terrific showing for its entire history. I was reading a piece of news about the CAGR returns that this fund has given for the last so many years. Do you reckon, is it to the tune of 20% or thereabouts? And
over the last 21 years, the multi-asset fund would have given a return of 21% per annum. 21%
per annum. Do you reckon such returns are possible now?
That is the last thing that I would say on any show.
Got it.
Past performance has nothing to do with future. That's what we keep on saying, and I'll continue saying that. I gave you the reason of investing in multi-asset fund. Past track record should only be seen as whether the AMC knows how to manage the money or not. It's only an indicator what has happened in the past. It has got nothing to do with what should be expected in the future. I would say that if you get, India has got we are very lucky to be in a country like India, where the nominal growth rate in the country is around 11%. If the nominal growth rate in the country is 11%, equities would give you slightly better returns than that. So one should expect that kind of returns and come into. Last 5 years also is indicative. Last 5 years, market has given 13% return, and earning per share has also grown 13%.
Right.
So that is a very fair indication of what, it will depend on how much the earnings grow. You said mid-cap, small caps have done very well, because mid-cap, small cap earnings have done much better than large cap. So if the earning per share, so now even mid-cap, small cap also, if you see very carefully, the share price growth is lesser than the earning per share growth. Right? So this is a very, very healthy sign that is happening. The share price is only following the earning per share. The P's are not getting expensive in the market.
P's are not getting expensive. That's a valid point too. Just one follow-up there. Do you believe that this whole theory of India growth in a faltering world might continue, because external growth would have an impact? But so therefore, would India still continue to shine if 2024 is a year of global growth coming off, including US, but elsewhere as well?
Fortunately or unfortunately, our companies are dependent more on the Indian markets than in the international markets. So companies which are there in the export segment will be impacted to that extent that the world is. I'm not saying it won't be impacted. We get two impacts. One is my export companies get affected, the country's export companies get affected, and another very important thing is the FII sell. Right? If the FII sell as it is happening currently. But now India is very, very robust to balance out the FII flows. The 21-22 has shown us that almost FII sold 5%.
Yeah.
See, look at 2008, look at 2020. FIIs sold 5% of their holding in 2008, market fell 56%. FIIs sold 5% of their holding in 2021-22, market fell only 10%, right? So that's the difference which, and I'm seeing the current behavior with the kind of shows that you have done, the kind of education that media has done, and I'll give the complete credit to media and not to us, is that the media has educated the people so much that if the markets fall from 66,000 to 63,000, we start getting inflows.
Yeah.
So DIIs are very well balanced there to balance the FIIs. So I am not that concerned. I think we are balancing out the FIIs quite well.
Okay.
So from both the point of view, I don't think the world will matter. My export companies will get better, and we can't have a very buoyant market if the world is selling. But FII holding has also gone down from 21% to 16.6%.
Yeah. Which is true as well. But you know, I love that, by the way, because for years my grouse has been the average Indian investor has not been able to take advantage of the wealth creation that Indian companies have provided to investors. Now we've seen finally signs of that through direct investing and through mutual fund investing both. So that is a great sign. But we'll talk more about this. Actually, some learnings and some insights and some advice from Mr. Nimesh Shah on the next segment. Stay tuned to the Mutual Fund Show. All right, back with the Mutual Fund Show right here on NDTV Profit. I'm Neeraj Shah, and let's keep our conversation going with Mr. Nimesh Shah. Some words of advice. I mean, it's the launch week. We need to get acumen from wise people. There are northwards of 1,400 schemes, mutual fund schemes in the country. For somebody who's looking at it afresh, and I'm talking from a young investor's perspective, how does she or he decide what or how to go about choosing it? Yes, having an advisor is the fallback, but still a person wants to educate herself or himself as well. What would you suggest?
You use the word young investor. So though you didn't ask that question, I'm going into that area. Young investors are going into, if not, they should be in investing and not in speculating. That is the first thing. Okay. Right? I'll come to mutual funds.
Sure.
But the problem is there are too many people getting into this options and futures mode. Right? So it seems that it is easy money. Right? It only seems. Out of, SEBI has given that data that out of 100 investors, 89 are losing money. right? So it is 10% of the people are making all the money, and 89% are losing money. So young investors first get into equity for investment if you can understand the companies and if you can understand how the earning per share will grow over the next 3 to 5 years, right? Otherwise, we are there to manage money with a nominal cost. How do you buy mutual funds? Which mutual fund you buy? There is so many schemes. We all have got so many schemes. But I think it's, I would give my money to the person whom I can trust, right? So there has to be ultimately a trust on the brand. The brand that you are investing in, is it a trustable brand? Is it a big brand? Can it attract? What is our business? Our business is to attract the best people to manage money. Will the brand be able to get the best people in the market to manage your money? Right? Is the brand big enough to attract the best investors, the best fund managers to work with you? These are the two questions. Is the brand trustable in the Indian context? Will they close shop one day and get out of this country? Will that happen? Or how will they manage the money? Will they be able to attract the best of the minds to work with them in their company? These are the two questions. So I would, rather than going into any technical, and you can see the past performance. Past performance is only an indicative, right? That they have done it well in the past. Should not be, if you can study somewhat, right? And if you are, then you will have to trust the brand. But do not invest in a fund just because the past performance looks very good. That is only one filter.
Got it.
Ultimately, there has to be a trust on the brand that you are investing in.
Let's assume out of the many brands which a person can trust as well, because including yours, there are some very able brands out there. Even those would be a lot of schemes. How does one go about then figuring out what is suitable?
So see, you will also have all the fund managers on the program. Ultimately, it is a person's call which brand he can trust.
Sure.
I am only going on one point that there are many technical factors I can go into, but I myself, when I look at the person, right? I take a judgment on the person and invest with the person. That's how I look at life.
Okay. What would you tell young investors again from a perspective of unlocking wealth over a period of time, wealth that is built to be unlocked later in time? Are there some guiding principles?
See, I have always believed that if you can spend a lot of time in the market compounding, it makes a lot of sense, right? So whether you invest with any of the credible brands, as you referred earlier, if you stay in the market for a long period of time, right? Give it time. Money is not going to be made quick, right? Only F&O, futures and options, you can make money quickly or lose money quickly. Investing, it takes time. Sometimes if you become lucky, you suddenly make a lot of money. This has happened. In fact, be very cautious when you make a lot of money, right? I meet so many people who think they are experts, and when they talk, you realize they are not experts, but they have made money. Is it true that they have made money in the last 1 year, 2 years? Yes, they have made money. The problem is they have started believing that they are experts in that without understanding what the company's profit will be in the future. You don't know anything of the company. Somebody told you, and this has happened. I have been seeing it since last 30 years, since Harshad Mehta's 92 boom. We have been seeing that people start believing that they are the experts when their calls go right. But unfortunately, it all ends with losses because it is intoxication, right? Intoxication of going right is too high. So beware of that intoxication. That's what I'll tell the young guys, that beware of that intoxication, that you are always right. Right? It does not happen that way.
That's wise words. My final question to you, and that is, so I know that you invest a lot of your money in ICICI approved schemes
all
as
my
well,
money,
all your money, and you would naturally do that. But I'm just trying to understand, if you had to pick up schemes currently as an independent investor, I'm not asking you for a fund house or this, but what nature of funds would be the top of mind for not just 2024, but let's say if you were to start investing now for the next 3 to 5 years, what are the schemes, what are the kind of funds that would be top of mind for you?
I'll decide how much volatility I can take. A person like me, I can take volatility. I don't get worried if my portfolio is down 20%, I won't worry. Right? My sleep won't get affected if my portfolio is down 20%. So I will go for a pure equity scheme, right? And I would, because mid cap, small caps are very expensive today, I will take a large cap fund, right? That's what, or a flexi cap fund. I'll take a flexi cap fund so that the fund manager has a choice of investing in large cap or mid cap. That is what I'll do. Suppose I'm a person who cannot take volatility. The simple answer is ICICI Prudential Balance Advantage Fund or ICICI Prudential Multi-Asset Fund, because it will give you a allocation to equity, it will give you allocation to debt, and it will give an allocation to gold also. In multi-asset fund case, it gives all three asset classes.
Something that you guys are bullish on right now.
Yeah.
Perfect. Mr. Shah, always a pleasure talking to you, more so during our launch period. Thank you so much for being with us, and I'm wishing you and team a great Christmas festive season and a very happy 2024.
So this is a small cap that I am also investing in, that this is going to become large.
Thank you.
All the best.
Thank you so very much. Thank you so very much. And viewers, thanks for tuning in to my inaugural show of the Mutual Fund Show on NDTV Profit.